of Ramkrishna Forgings to talk about business outlook and demand trends. And by the way, why Ramkrishna Forgings? Because they derive 23% of their revenue from this market. So, Mr. Jalan, thanks very much for joining in. The first thing I want to ask you is, if this run rate is going to be sustainable from here on, because in the previous 4 months, I think barring June, we had seen orders consistently dipping. So is the rise sustainable, and then this run rate of 21,000 plus sustainable?
I think, first of all, we are not much dependent on Class 8. Overall, I think 23% has come down to close to 10 to 12% only. But what we see right now is the demand is going to be sustainable. But 21,000 number, I will not be able to vouch on. But we feel that the market is pretty strong in the North America and is going to continue to the next year.
Any signs of slowdown in North America or Europe? While we understand on one hand the chip shortage issue is getting sorted, which is a positive tailwind for an industry that you are operating in, but people are talking about a hard landing, the possibility of a hard landing in US, Europe. There are concerns about the energy crisis and the impact it will have on manufacturing. Any signs, even early signs of a slowdown, according to you?
In Europe, we see some early signs, but I don't think it's going to be a hard landing. We see maybe market may go by 5 to 10% soft, but it was an unusual time right now, and things were very, very strong. I think market going down from here is not going to be very detrimental to overall supply chain, and things are going to be pretty good going into next year also.
You said 5 to 10% lower than
the peak.
Okay. Only for Europe?
Yes. And North America is pretty doing well. I think we are seeing improvement in North America demand. What was vis-a-vis what we saw in the first quarter. We are seeing improvement in demand. So we feel that this is going to remain strong going into next year.
All right. Hi, Mr. Jalan. Morning. So if we take a look at the entire exports for Q1, we saw a dip of around 5% in the sales volumes. You're saying North America is looking good. Can you tell us where the pressure is coming from? Is this largely on account of what you're seeing in Europe?
Yes. I think in first quarter, it was both US and Europe, but going into second quarter and going in for third quarter also projections, what we feel that US is going to remain strong. Europe is going to be little subdued, but not very down.
So what can the exports look like then going forward?
I think in an overall year perspective, we should do at least 15 to 20% higher than what we did in FY22.
Okay. Mr. Jalan, you said your dependence on the North America market has come down to now, 10-15%, right, of your revenues, not the 23% which was earlier. What is this on account of? And if the North American business is shrinking, where are you making up the rest of the exports from?
No, I don't think our North America business is shrinking. Our overall portfolio has grown, and the addition to the new portfolio has come from Europe as well as South America. So that has basically helped us in terms of percentage-wise to shrink the North American market.
Okay. I think last quarter you had order wins of about 388 crores, sir?
Yes.
Okay. Is that
approximate?
Approximate. Is that the run rate we should expect even in Q2, Q3? How have the first 2 months been in terms of order wins for you?
This month also there has been good order wins. I think probably we will see some more good order intakes in this month and going into October. And we are pretty doing well. I think, like I said, in Europe as well as South America, we are getting into new customers as well as new components. That is helping us to win new orders.
But what could be the order intake guidance for this year? 400 crore run rate every quarter?
Yes, 400, not 400 crores every quarter. Probably the full year we should be getting into close to 900, 950 crores of new order wins for the full year.
Okay.
All right. Sir, since we've already spoken about the exports, let's talk about the domestic market as well, because that's where you're seeing a lot of the strength come through. It was around almost 80% growth year on year that we saw on the domestic market. What do you expect on this going forward? And how much do you think is an achievable run rate for the full year just for the domestic business?
full year we should be growing close to around for 50%. And I think what we see, the domestic market is extremely volatile, and month on month projections are changing. It depends on day-to-day basis. We are working in the domestic market. We are unable to really project what exactly we are going to end up with. But for the full year basis, we can very confidently say that we should be 80% in the domestic market.
Okay. Mr. Jalan, realizations have inched up on a Y-on-Y basis. What is the headroom from here, both in the domestic and export realizations to move higher?
I think right now with the current commodity pricing realizations, we are going to remain pretty stable with what we did in last quarter for the full year or this FY23.
Okay. What is your current capacity utilization, considering the demand is strong?
Close to around 75%.
75%. And will it sustain at this level?
Yes, I think we are going to improve going into third quarter and fourth quarter.
Okay. But
Roughly,
75%?
if we see second half, we should have a utilization of close to 80 plus what we are looking at.
Okay, but currently, if your utilization is at 75%, is it not lower than the Q1 utilization of 78%?
No, if you see, we have plant-wise in our presentation, plant-wise, we have separated the utilization. And the biggest plant right now is, which was close to around 58%, is right now at close to around 75% plus.
Okay.
That's where the most of the revenue is coming in.
Okay, got that. Sir, now that we have you with us, could you also take us through what is the latest on the semiconductor issue? Of course, we've been speaking to a lot of managements, and they do seem to believe that, it is easing significantly. Is that what you've picked up as well?
Yes, what we see is a significant improvement in availability of semiconductors. And I think probably by the year end, we should be out of this completely.
Okay. Expect the situation to be completely normal by the end of this year in terms of semiconductor and chip shortage issue. Any debt reduction plans?
Yes, I think already in the first quarter, we have reduced our debt by almost 50 crores. And this first half, we should be above 100 crores of debt reduction.
And for the full year?
Full year, we are looking at close to 200 crores of debt reduction.
Okay. Thank you very much, Mr. Jalan, for joining in. So that's Ramkrishna Forgings saying demand in North America